Hey everybody, James Shepard here with another edition of the Self-Storage Insight podcast. Today we're talking about payments, not just how to collect payments, but card and ACH payments. How do we want to structure electronic payments? How is it different for the self-storage industry? And what you may not realize is how key this concept is, not only to the profitability of your self-storage property, but also for the valuation. How do you get a higher valuation? So we're going to talk about all of that today. I've got a great guest for you. Before we dive into that, I want to give a shout out here to our sponsor, CC Storage. I'm the founder of CC Storage, so of course I'm a little biased. I think it's the best software out there by far. And it's an interesting one for this episode. We do reference it a few different times because CC Storage is something that I started from my knowledge in the payments industry. And so obviously we had a lot of self-storage experts as well to build out the right feature set, but we wanted payment processing to be core to our strategy, which is why we're able to do payment processing for free and have no software fees for CC Storage. If you want to learn more about how to reduce your cost while getting the best in class support and feature set, head over to ccstorage.com, schedule a free demo today. With that being said, let's dive into this interview. Hey everybody, I'm here today with John Shirey of Full Stack Payments. How you doing today, John?
Doing great. How are you doing, James?
I am doing fantastic. So a little background, I am the founder of CC Storage, also founder of Full Stack Payments. And so Full Stack Payments is a payment processing company. So today we're going to be talking about payments in the self-storage industry. It's actually super important. There's a lot of really great things I think we can share with you today. So John, for starters, can you give our audience a little bit of your background and talk about, how you came into working in the payments industry and all that?
Yep. So I've been in the payment space for coming on 7 years, actually. So it's been going by pretty quick. I did a lot of different things in payments, everywhere from just recruiting agents and trying to help agents sell merchant services, sell payment processing to business owners. Everywhere from that to working with a software company that did statement analysis for for businesses. And so did that for about 5 years. And then about a year and a half ago, we started Full Stack Payments. And so Full Stack Payments was started to help software companies monetize payments, help them maximize their margins and their retained revenue and everything that they can get from the payments piece, provide expertise to software companies in that regard, as well as work with merchants directly. So we have an agent channel as well that sells merchant services through Full Stack Payments as well.
Yeah, I love it. And it's so important too, because using different forms of payments, having different payment economic models allows companies like CC Storage to do really unique things, with their software pricing, which we'll get into in a minute. So what I was wanting to do today, John, is, as we talk to self-storage property owners today, I want to talk about payments, but I want to talk about it through the entire journey that, these self-storage property owners would go through. So I want to start with the sign up. So, when you think about a self-storage property owner and they're like, okay, I really want to switch to a new software, right? And what's really crucial with that is the card migration. So can you talk a little bit about what is a card migration? Why is it important? And also, why is it so hard? Because I don't think there's no companies really offer that too much. I know CC Storage does, but it's a pretty tough thing. So maybe let's talk about that a little bit first.
Yeah. So if you're switching softwares currently, obviously your cards, or if your tenants are on a subscription-based payment plan, those cards are stored in a gateway, or they're stored in somebody has those cards where basically you're going to transfer that data from one gateway to another, or from one processor to another. And so that's the first step probably in deciding whether or not it's a good time to switch a software is, can the new company that you're thinking about working with assist you with that process? Another thing to consider is the current company you're with willing to work with you in that regard as well? There are some companies that will not basically assist their tenants at all in doing any type of a card migration. And they'll basically say, hey, if you want to switch softwares, you can, but we're not going to help you in any way. And to me, that's a huge red flag. If you're with a company like that, and they won't let you, switch or try to lock you in and not give you what you need, not give you access to your tenant's information where you can get set up in a new software, that would be a big red flag in my opinion. But that would be the first step is, just deciding like, okay, I want to go to a new software. can somebody assist with this migration? So what it would really look like would be basically getting all of your current tenants, getting their subscription plans, their card data, and it transfer that to the new gateway. And then basically the CC storage team, how they would work with that merchant then is to match up those cards, with the current tenants that are in the system, so that basically when you start using the new software, everything's set up and ready to go. You don't miss payments. You don't have to reach out to tenants and ask them to re-upload their card, because that just gives everybody a bad experience, and it can be avoided. Like we can get around that, and you should be able to switch softwares without having that pain point for your tenants.
Yeah. And I like what you said at the very end. That's really important, is like, if you're a self-storage property owner, you're thinking about switching software companies, just remember it is possible to grab the existing card holder information that you have, not having to do like a whole new card method. Now, again, like John just alluded to, there are going to be companies where they're going to say, no, we're not going to give you that information. Well, that's your information. That is literally your customer information. Now, there are certain requirements, like they can't send it to you because you're not a PCI, related company, but they can send it to us. They can send it to the gateway. So they have to be willing to do that. And we've actually worked with quite a few companies that were like, no, we don't do that. And then we're able to say, hey, hold on, here's how we do it. And they're able to make it work. So, so card migration, super important. So again, right off the bat, the idea is you are collecting cardholder data. That data is very sensitive information, has to be secured and what's called tokenized. And then that information needs to be given to the new software company that you go to make sure you have that. So reach out to your software company and make sure, hey, is my information tokenized and is it my data? If I want to switch to somebody else, are you going to release my cardholder data? And again, most of the major players will release that data as we have seen over and over again. So, so that's really important. So that's number one. So then number two, once you have this cardholder data into your new software, now you have to make these decisions around pricing. How are we going to price the payment processing, right? And so, John, talk a little bit about dual pricing, because I know that's, again, what CC Storage has done. Why has that become so prevalent? We see it not only at self-storage, but we see it all over the place, little restaurants we go to or retail stores or the auto repair shop. Everybody seems to be doing some kind of differential pricing. So talk about that a little bit and your thoughts on that trend.
Yeah, differential pricing is relevant not just for self-storage, it's relevant for all businesses. And the reason for that is, typically credit card processing fees are one of the biggest expenses that a small business has. Maybe outside of the rent of their actual, their storefront or whatever. And in self-storage, a lot of times that rent might not even exist. So it's almost always the biggest expense that self-storage property owner has is, credit card processing fees. And so when we talk about differential pricing, there's multiple forms of that. There is what we call cash discounting, which would be there is a price at the facility or at a retail shop or whatever. There's just a standard price, and then somebody offers a discount if the customer pays with cash. So that's what we call a cash discount. A dual price, which is our favorite version, is where we will actually list multiple prices. And so basically what we're doing is we're saying, okay, if you're renting your storage unit for, just I'm going to use an even number like $100, $100 a month, then instead of you, the storage owner, having to pay those fees, instead what we're going to do is we're going to implement what we call a dual price. And the tenant is actually going to be responsible for the credit card processing fees. So how we do that is we basically have two different prices listed for that tenant. So we're going to have a higher card price. In this case, that unit would be $103.99 if the customer paid with a credit card. And then we would show a lower differential price, whether that be card or whether that be cash, check, or even ACH. And so what that allows us to do, or anybody that implements one of these types of programs, is it allows you to say, okay, I'm currently having this big burden of credit card processing fees. Now I'm going to shift and pass that off to all of my tenants, in this case, if we're talking about self-storage. And so you're eliminating a massive expense for your business. And I always personally, if I'm talking to a merchant, if I get a chance to talk to a merchant, or even if I'm talking to software companies, I always try to ask them, who should pay the processing fees? That's what it always comes down to. Mm-hmm. And it's my personal belief, if somebody has $1,000 in credit card processing fees, I don't think that the business owner should have to pay that expense. I think it's a lot easier for, 100 tenants to split that, $1,000 up for a couple dollars a piece, or 1,000 tenants to pay $1 a piece than for the merchant to have to pay $1,000. So that's my firm belief. But that's what we call dual pricing. The third option would be a surcharge. So surcharge is actually pretty relevant. In terms of, I see a lot of other companies trying to implement a surcharge program, which I actually think is a really bad idea. A surcharge program basically says, okay, we're going to add a fee for credit cards, but there's all kinds of stipulations on on being able to surcharge compliantly. You cannot surcharge more than 3%. You can't surcharge in certain states. Certain states just don't allow it. You can't surcharge on debit cards. So if we're talking to a business owner about eliminating their processing fees, you don't get to do that with a surcharge program. I was working with an agent yesterday, breaking down a statement that he had gotten from a merchant, and he had this merchant on a surcharge program. And he was like, man, this merchant still has $2,500 in fees. I basically told this merchant that I'm going to eliminate their processing fees because we're going to do the surcharge program. He's like, what's going on here? And I broke down the statement for him. I'm like, look, your merchant is doing 90% debit, and their discount rate is 130 basis points on top of interchange. So basically what's happening is he's on a surcharge program, but he's not getting any of the benefits because everybody's paying with the debit card. So that's the three different forms of dual price or from differential pricing. By far, I try to work with software companies like CC Storage to implement dual pricing because it allows the business owner to eliminate all of their fees. It really eases the burden on the tenants because there's multiple options. If somebody doesn't want to pay the higher card price, that's okay. You can pay a lower ACH price, or you could pay a cash or a check price, whatever that business owner wants to implement on their side.
Yeah, it's really interesting, John, because I was, talking about this makes me think back to probably maybe like 7 years ago or something, when we launched CC Storage the first time. Maybe it was 8 years ago, actually. It was a while ago. And when we launched it, we weren't using dual pricing, and we were charging for software. And when we went to market, so this is like pre-COVID, we went to market with it. You hadn't quite, I don't think, joined the team at that point. And, it was interesting because we launched it, and what we heard from one self-storage property owner after another was, well, I don't want to pay any fees. Like, why would I? Back then, there was a lot of self-storage property owners that didn't even take card because they're like, why would I pay a fee? I only have so many units. They're all full. What's the deal? And so when dual pricing started to become popular and we realized, hey, this is what we can do, it solved two problems for CC Storage. One is we were able to go to these merchants and say, hey, you can now take card and you're still going to get the full cash value of the rental price. You're not going to pay anything for this because it's going to go to the customer if they want to pay with a card. Mm-hmm. The other thing it solved for us is we were like, hey, we're actually going to make a little bit of money off of each of these payments. So let's just wipe out the software fees.
Yeah, that was definitely going to be my next point. It's not like it's a two-headed sword, like you said. I mean, we're eliminating the processing fees, but because we're a payments company. But not only are we a payments company, we're helping monetize payments for like companies like CC Storage. So now CC Storage, because they're making revenue off of payments, they can go to the business owner and say, hey, not only do we eliminate your fees there, but we don't have any software fees. And it's such a huge advantage. It's just such a huge pitch to be able to have that differentiator. Software companies are being built rapidly. And it's very hard to compete when most software companies have a lot of the same features. So if you look at a company like CC Storage, there's going to be other software companies that have basically the same features that CC Storage has. And so everybody's saying the same things. Hey, we have site maps, we have tenant insurance, we have, we can do all these things. We do auctions and all this stuff, all the features that somebody needs for CC Storage. And everybody has that. But what CC Storage can do now is they can say, but we don't have any credit card processing fees. Oh, and by the way, we also don't have any software fees. It's just a huge, huge differentiator.
Yeah, it is. I feel like with CC Storage from the beginning, it's been about support and it's been about eliminating cost. Yep. And, those are the two things we provide. And I think that, again, payments play such a huge role in that because our knowledge of payments has allowed us to do this really unique business model. And then to me, features are, it's like table stakes. It's like, obviously, and even for us, we're still building features for a lot of the really, really huge property management companies that are requesting features before they would come on board. But we're at a point now where I think we signed one up last week that has about 5,000 units. And so, we have those feature sets, but, building the features is obviously a prerequisite, but that to me, it's not easy. I mean, it's hard to build them in a user, in a convenient way for the user experience, but, like you said, that's not a huge differentiator. The differentiator is going to be the support and it's going to be the elimination of cost. Hey, James Shepard here again. Let's take a break from the episode for just a minute. We're going to get right back to the interview, but I want to talk about CC Storage for a minute. We are so proud of the payments integrations that we have done, the ability to do full card migrations. That's a big one. I want to highlight that today. If you're coming from any of our other competitors out there in the self-storage industry, if you have cards on file for your customers, odds are we can grab all of those cards on what's called a card migration, and we can pull that right into CC Storage. Our support team is going to do the heavy lifting for you, pulling all of those in, matching them up to the right customers so that you don't skip a beat. If you want to learn more about CC Storage, come over to ccstorage.com. Let's dive back into our interview. So John, let's shift gears a little bit. So we get these, I'm a self-storage property owner. I switch software. I bring all my existing cards in so I don't lose that. I implement dual pricing. So now I'm not paying any credit card processing fees. If I'm with CC Storage, I'm not paying any software fees either, let's say. But then now only 30% of my units are paying with a card or ACH. The rest of them are cash or check. Why should I care about that? And why should I push electronic forms of payment now that the cost is gone from it? What's the rationale for me as the property owner to push electronic payments?
Well, I mean, for one, the absolute headache of dealing with, cash or check and trying to track down payments from customers and trying to track down when they're going to stop by the facility and drop off their payment or God forbid, mail their payment in. When you see all that kind of thing, I would say definitely the trend though is, more and more properties that at least that CC Storage is working with, to my knowledge, are a lot of times even completely cashless or completely, they don't want to take any checks at all anymore.
Right.
And there's so many benefits to that. You can send out automated payment reminders. You can send out payment links via text. So anything that any business owner can do to eliminate expense, whether that be payroll expense, just all of that type of stuff plays into like your retained revenue. So anything you can do to like help automate that, payments should be pretty much automated. It should be sitting in the background, but it should be viewed as a partner to make your life a lot easier, to help you, do things with your facility that you shouldn't have to do manually. It's 2025. You shouldn't have to do that manually anymore.
Yeah. I had a conversation with Brandon from our support team yesterday, John, and we were talking about how there are still a lot of people who they don't want to be on auto pay, for their unit because they want to make sure they have the money in the account, that type of thing. Mm-hmm. And so we were talking about how a lot of self-storage property owners don't even realize that they don't have to be on auto pay. Like you can still get your tenants to put their card or their ACH on file. And then on a monthly basis, when it's time, we send them the link, they click it, and they click pay on the invoice. They can sign up for auto pay if they want to, but they don't have to do that. Sure. And I think that, again, if you're a property owner, in my mind, it's like, you're hopefully building an asset, right? Either for yourself and or for your kids or whoever is going to get this. I mean, all the time we'll get, kids, children in their early 30s reach out and say, man, my dad just passed away. I inherited this storage unit and I went to their desk and they had a stack of papers, and they're like, what am I going to do about this? Right. Yeah. And it's like, man, everybody pays with cash or check. I don't even know, are they going to walk in here and pay me? So it's like, whether you're looking to sell the facility in 5 years or whether you're looking to pass it on to the next generation, do you think it's going to be more valuable to them if you have enforced electronic payments and no one has to ever run any cash or check to the bank? Right. Or is it going to be more valuable if 70% of the people are, walking in and dropping money and you have to pay a person to stand behind the counter, right? Obviously. So,
and I would say there's a couple things with that. I mean, prior to differential pricing becoming so relevant, there was an incentive for people to take more cash. Right. I mean, if you're paying a lot of credit card processing fees, there could actually be an incentive to take cash. So that's why, I would go back to like, hey, it's definitely important to implement a model like differential pricing, at least of some sort. So that way it's definitely not any burden to accept credit cards. Mm-hmm. You definitely should be pushing that direction. The other thing that it allows you to do is hopefully your facility is full. Hopefully you have a waiting list. Hopefully CC Storage, can help you with that. And when that is the case, it would be my recommendation to like have scheduled price increases. And if somebody is automatically on, if maybe they're not on auto pay, but maybe they're getting that invoice like you referenced, once a month, it's a little easier when you see that invoice go up a little bit over time. Versus like if you stop in, it's like, oh, hey, I wrote this check out for $100, and they're like, oh, now it's $103. And I'm like, oh, stink. It just is a more negative experience. Like
Yeah.
Nobody ever minds a price increase nearly as much when it's just happening in your automatic, on your gym membership or your cable
Right.
bill. It just goes up automatically, and it's just a lot easier to implement price increases. So.
Yeah, that's a great point. I hadn't thought about that, but yeah, on the price increase side, that's such a big deal, because again, yeah, if I'm writing a check for $100, it's going to be a lot harder to get me to write a check for 103 versus if you just go into the system and send out an automated email that we have in our system that says all the prices have increased 3% this year. Well, everybody's just like, okay, whatever. And then you're going to run the car the next month for more, and you're going to just collect more money.
Right.
That's what you want.
Yeah, and it's also not face to face. I mean, that matters in 2025.
Right.
I don't want to have an uncomfortable face to face interaction with somebody.
Right.
It's a lot easier to send an invoice and be like, or send an email, a bulk notification that says, our units have been full for 5 years. It's time for us to implement a price increase. So things like that.
Well, John, I think the other thing that's interesting, kind of evidence for that I find interesting is, now that we're working with larger properties, 1,000, 3,000, 5,000 units, whatever. What I find so interesting is those tend to be the properties where they are enforcing the auto pay. Like you can't even rent the unit if you don't sign up online and go auto pay. And, I'm not saying always, that you always want to do what the biggest companies are doing. I mean, sometimes you want to have a little bit of a different experience as a smaller shop, but it's like, there's a reason. And these people were all doing that. I mean, now they're really excited about dual pricing because they're going to save a lot of money, but they were doing it before that. They were doing that, but they were paying for the fees because they saw the value of, having this all automated, knowing what the recurring revenue is going to be month over month, and just kind of requiring that. And so again, you can do that. That's a gradual process. I was talking to Brandon yesterday about the idea of having stages. It's like the first stage is like just really promoting it. Go to all of your tenants and say, we have card and ACH options. We want you to sign up for this so you can save the gas money of driving over here or the stamp or whatever it is. Right. But then you could go to say, hey, you have to pay with a card or ACH. It doesn't have to be auto pay, but you have to pay with a card or ACH. You can do it one time. That's fine. And then the third level is like, okay, now we're just going to say it's auto pay. And so I think it's interesting to have, for these property owners to go like, hey, what's the next step in this payments journey to maximize my revenue and the operational efficiency of the business?
Maybe I can add one thing to this particular topic too. It's so important to work with, which in this case, if we're talking to business owners, maybe it's not as much important to them in terms of how important it would be to a software company like CC Storage, but you want to work with a payments company that understands your vertical. And that understands the way that payments should work best for you. And what I mean, let me give you an example of ACH, for example. I had one of our referral partners that refers some deals over to CC Storage. He was talking to somebody in the past week or so that said ACH doesn't work for self-storage because of all these different reasons. It's a horrible plan. I've tried it with multiple processors. And it was just this blanket statement of how ACH doesn't work specifically for self-storage. Well, one thing that I would point out on a meeting like this is how CC Storage has implemented ACH is completely different because they can control that on a per tenant basis. So what happens in CC with self-storage is somebody gets behind on their bill, and that unit might go to auction because somebody's not paying their invoice. Well, if somebody doesn't have ACH set up correctly, or through the software partner correctly, that tenant could go in, make an ACH payment for that particular storage unit, and get the lock released and go in there and empty out their storage unit, and then they could put a stop payment on the ACH payment, and the business owner would be out of that funds. And they would be out of everything that was in the storage unit, and the tenant got away with basically all the money. Well, what CC Storage is able to do is they're able to say when a unit or when a unit goes to auction, we can automatically disable ACH for that particular tenant. When somebody's ACH fails one time, that particular tenant can automatically be disabled from ACH again until the self-storage property owner says, no, everything's good here and we can turn that back on. And so you really want to work with somebody that understands your vertical, understands the pain points of a specific industry. And I think that's what Full Stack Payments does really well. I think we really try to work with the software companies, understand their customers' pain points so we can set up them for success.
Yeah, I'll give you another good example, John. This is interesting. I think you remember this. There was maybe, I don't even know, 8 months ago, or whatever. We were working with a gateway provider through Full Stack Payments that we were using with CC Storage, and they were failing for AVS, for address verification. And we were able to dig into that and go, well, why is this happening? And it's like, well, for people that are moving into a self-storage unit, a lot of times they're in the process of moving.
Right.
And so obviously their address verification is going to fail because it's not the same. They just changed their address. So we were able to say, hey, let's turn that off. And so what we do is we try to run it with AVS to keep the cost low. But if that doesn't work, then we run it without AVS. And so we were able to dramatically increase the card approval percentage. So again, it goes back to that of like, I've never had another business type where we did that. Right. But you do that with self-storage because it's different. And so I think, like to your point, payment processing is not equal across the board. Yeah, exactly. Customizing it, for a vertical is super important. So, John, really appreciate you taking the time today to jump on with us and just talk payments. I know it's not maybe the normal topic for self-storage industry, but I think it's something that the industry should be talking more about. And so I really appreciate you jumping on and sharing your insights.
Yeah, definitely. I appreciate you having me on here. I like to talk payments. So
yes, I know.
So we have that part in common. So appreciate it for sure.
Awesome. Thanks, John.
Yep, no problem.
Hey, everybody. Thank you so much for taking time to tune into this week's episode of the Self-Storage Insight Podcast. I hope that you've enjoyed it. I'm really excited to bring you these episodes every week as we get more and more experts in the self-storage industry to contribute. If you want to learn more about our sponsor, head over to ccstorage.com to find the best in-class self-storage software management system. Until next week, wishing you great success.